Sure. All right, we are officially live with another edition of the Pay Practitioners Panel, coming to you from all over the place. So again, if this is your first time joining a Pay Practitioners Panel, what you're seeing here is a collection of probably close to 150 or 200 years of compensation experience from this group of compensation consultants. Today, we're going to talk about bespoke pay packages, bespoke and customizable total rewards offerings that companies are giving to folks. We ran a poll earlier this week. About 400 or so odd companies came back and said that they don't let their companies or they don't let their employees choose their pay packages. But one of the things that we want to talk through is, what does that actually mean? Because I think that probably a lot more of us than we realize are providing bespoke pay packages and bespoke packages for our folks. So the first thing I'll share is a very short slide that I have seen from Shopify. Shopify is a great example of what some companies might have considered this, but as we go through it, we'll actually talk through what does that actually mean. So let me share this. It's just a 10-second video, and we'll pull this up right there. And then what we'll do is we will we'll go through and talk about, how does this make you feel? So let me share my screen here. Here we are. This is on the Shopify blog, and this is one of the offerings that they have for their employees and one of the tools that they use to attract and retain folks. So if we watch this, it'll kind of just do a quick view of, what does it look like for employees or potential prospects. So as you can see here, there is a lot of customization around what the Shopify teams can do. Let me stop the sharing. And we'll go back and just, I want to tee it up and say, guys, how does that make you feel? What's your gut reaction to what Spotify is doing? Dan, I see you clapping.
Yeah. The reality is, the fact that we don't do this more often is more a reflection of us not wanting to do complex things than it's a bad idea. The reality is, pay is personal for people. And to the extent we don't allow for them to personalize it, it's kind of crazy. Imagine if you were in a 401k program and the company said, you're allowed to invest in what Bob, our 401k administrator, thinks is the best investment. Just that one. We would go, and by the medical plan that you have, you're allowed to have this specific medical plan. It's designed for me. I have 11 kids and I live by this hospital. Y'all got to use the same hospital and same health plan. We don't do that because it's insane. But we do that when it comes to the biggest piece, which is base pay and incentives. To me, it's crazy that we don't have more of this.
Well, so the flips. So that I haven't actually seen that Shopify thing. That's really interesting. Shopify is a very interesting company. They've always been pushing the boundaries of rewards in very interesting ways. Netflix also had this as well, where you could choose between options and RSUs. And the challenge with some of it is, apart from the administrative challenges, which I agree shouldn't be a reason not to do a thing, but the understanding of people on the other end of it, and whether they do understand it, and whether they think they understand it, but they don't understand it, and when they trade an option for an RSU, do they understand the risk reward profile that comes and goes with that exchange? And it's not as simple as a sliding scale, most likely. So if you go on to Blind and was a Fishbowl and all those discussion places, you'll find huge threads of discussions of people trying to figure out what the right point on the slider is for them. And a lot of the conclusions eventually come to just take the cash. So it's kind of interesting. I actually had a look at some of these discussions at one point, and a lot of it came, the top rated answers were often just take the cash and figure it out yourself later. Like, it's a safer option. But a lot of it comes down to how do they convert between the option and the RSU. I remember Netflix had an incredibly complex, I had to read it 3 times to understand how they figured out the conversion ratio, options to RSUs, and then how do you get from cash to equity as well. Now, that's all. I like that. Now, I would like that personally. I think it'd be fun to kind of go down that rabbit hole and try to figure out what the option makes sense. However, most people don't understand an RSU. That they don't. A lot of people not that they can't, but they don't have the time or inclination to understand what the equity is. So I do like it. My caveat is you're essentially becoming a financial advisor at this point when you're offering this many options. And any financial advisor, well, any kind of finance offering of this nature would come with a warning, you should seek advice before choosing this. And I almost think that Shopify page needs to come with, you should seek financial advice before choosing an investment course here, because that's kind of what's happening at this point. So I do like it, but it's very new, it's very unusual. I think maybe it requires a degree of education to be used effectively.
Shopify does actually.
I do. Okay.
Yeah. So I love this argument that it's too complex. People are too stupid to make decisions. I mean, that's basically what we're saying. Or we're not smart enough to help them make decisions. Both of those, I think, are disingenuous. So I would just ask this panel, raise your hand if you understood every aspect of the last healthcare benefit program you signed up for. Raise your hand if you truly understood how the investments in each fund that you decided to allocate money in your 401k program, how those funds worked, who was managing them, and how and when they made changes. And these are professionals. These are people that do this for a living, maybe half the panel. We can't expect that people know things that we don't. But the reality is we ask people to make really hard decisions about things that they don't know about when it comes to pay and benefits all the time. To say that we can't give them enough information to choose between more cash or less cash, or do you want your annual incentive to be in cash or in some type of equity, or you want to do some arbitrage in your pay program. I mean, our systems don't do it very well. The market data doesn't support it very well. It breaks our pay structures that are rigid and our job architectures that are rigid. All of that's true. But, I had a CEO that once CFO was explaining how difficult something was. And the CEO goes, wait. Is it a hard idea or is it a bad idea?
I would argue that I would love to see the analysis behind, is the trade-offs that opportunity to choose to employees going to give them so much more satisfaction or contentment or meaning or benefit that it's worth the extra administrative burden?
In my experience, and because I do a lot of these choice programs, yes. That being said, in my experience, 80% of employees choose whatever the hell the default is. Because they're like, look, I'm guessing the company isn't trying to screw me over.
But then why not just pay them the cash and they can go and buy whatever equity they feel like?
Right.
Because you might be offering them a better exchange rate. So we've created programs where we say, hey, look, your annual incentive is 30% of your base pay. But you can get that in cash at the end of the year. Or if you choose, because we need the cash as a company, we're a startup, we could prefer to use our cash for other investments. We'll give you options or RSUs at a 125 or 150% exchange rate in value. So instead of getting $30,000 in cash, would you like $45,000 upfront value in RSUs? And you take the risk that you have to wait for them to vest and the value should grow, but you get a bigger upside. And if the stock price does grow, you multiply that upside. Most people will take whatever the default is, but some people will go, yeah, I'm in. I'll bet, I'll go all in on this company. Don't give me any cash. Give me equity. Matter of fact, don't pay me anything. Just give me equity.
And does that eventually lead to what we have on the benefits side, where we have the highly compensated employees and non-discrimination testing and the IRS in the middle?
Oh, it will.
Right?
Sure.
Ultimately, it would get, there would be somebody else stepping into those choices to make sure that the advantage doesn't go to people who are already highly compensated. And I would wonder in some of these choices, how do you defend your pay practices if you have questions about your pay equity.
So, Justin,
Yes.
a great example of the most common version of this in the world of compensation. Justin listed this on something he sent out, was employee stock purchase plans. They have to be equitable in their design, but depending on the company, you're going to get somewhere between 5 or 10% to 90% of people in the ESPP plan. And ESPP plans are generally artificially limited to some percentage of pay. But if I am the spouse of somebody making a lot of money, why can't I put 100% of my pay into the ESPP? It's almost a guaranteed 15% upside.
Mm-hmm.
If I'm willing to wait. Could be a lot more than that. Yes, there's risks that you could lose that money. But I've seen companies offer this to people, and people go, yeah, this year, I don't need the money for whatever reason. I'll put 100% of my pay in the ESPP. I love this company, and it's going to make me rich. And I've seen people on a program that's limited to $25,000 a year make 7 figures in a period of 2 years. Why stop people from doing that?
So Dan, I'm curious, in your experience, is that a reason why people come to the company? Or is it an add-on?
Depends on the company, and
having that kind of freedom, like being able to dump 100% of your pay into the ESPP, like is that option? Is that like really like one of the stars on the page where when you're recruiting talent in, like, hey, we have this option, and people go, holy cow, like is that, or is it in addition to, yeah?
You have to remember, it's such an incredibly infinitesimally small percentage of companies that offers it that it automatically differentiates you in the marketplace. And the companies that do this lean heavily into it. As Justin showed, Spotify has it on their freaking blog. Like, go look at this. If this sounds interesting and this works for you, you should come work for us.
Well, it differentiates you. Yeah, it differentiates you if they want it. And if it's offered, and the offer in the marketplace is so limited, that makes me question, kind of back to Denise's point, is how many people, like, is this a gold star? Is this something that people really, really desire, and they're being hampered from it because companies are being too lazy, or we don't think they're smart enough to handle it? That's kind of my question. Is there a demand for it from employees, from what you've seen?
Well, again, people seldom, in my personal experience, people seldom ask for what they don't know they can have. If people don't think they can have it, they're never going to ask for it anyways. If 401ks were originally designed in the 80s, and when we rolled them all out to everybody in the world, in the US, and we said, hey, look, you're allowed to invest in these 2 investments. That's it. And no one ever did anything else. No one now would say, I want to invest in 26 different funds. Because people are like, okay, that's the thing. That's the thing, sure. But a lot of people's expectations are limited by what they think we have given them. It's like, well, if nobody offers it, maybe it's just not doable.
And one thing that we saw too is that Shopify, they mentioned that 91% of employees enrolled in the Flex Comp program. And there's also some additional studies that were done by Sherm and Gallup that kind of said 75% of employees that have that opportunity to create customized pay packages feel more valued and more engaged in the business because they have that choice and that opportunity.
And we did talk before this call amongst ourselves. Which executives have you ever brought in at a C-suite level? Have you said, no, you can't do any type of shaping of your pay program? Every one of them gets something. Every one of them wants something. And they expect it at that level. And we expect that they expect it at that level. And we do it almost always. So
there's a comment I would bring out that just happened on LinkedIn. Choosing something with higher future value over immediate cash is only feasible to those whose base pay exceeds their threshold that's needed to cover their current living expenses. So there is it delineates between the haves and the have-nots quite significantly when you get into some of these choices. And I think part of thinking through whether you want to implement something like this as an employer is thinking through what are your values. And does this line up with, how you want to recognize and reward employees? And we could get into talking about living wages too, right? Like, is living wages a better choice than giving people a choice like this?
Well, again, the companies that offer this very seldom have people that aren't making living wages. The question is why the heck did any company have people not making a living wage? Why in the world is anyone working in a full-time career-focused job and can't afford to live? And again, we're the comp people. We should fix that. If that's true, it's our fault.
It's a really interesting debate, and I want to clarify, like ESPP, that's got tax advantages, right? You can offer discounts, which otherwise you wouldn't be able to offer, otherwise it creates tax. So ESPP, that makes more sense because there's an immediate tax advantage and the government regulates how much of that you can invest in, etc. So if we just focus on choosing between a typical, let's ignore options for a minute because they get more complicated. So let's just say, just for the purpose of our discussion, this is a really interesting discussion, you only choose between cash and RSUs. And more highly paid people will start deferring more of that into RSUs. They'll take the long-term upside. Or you could take it all in cash and buy the RSUs anyway. And you could argue that it's kind of one and the same thing. Just depends a little bit on the calculations in there. I guess the real question is, what does it solve? Like, to James's point, is it going to attract more people? Well, maybe. But I don't know if we'll ever get any good data on that because, Dan, to your point, barely anyone does it right now. So it's more of a differentiating factor. So I don't know. I'm kind of like somewhere in between on this one. I think it's something I'd like to see more of, just out of just pure curiosity to see how people react to it. But like I said, just going on those discussion forums, I'm not hearing much positivity and excitement around it. I'm hearing a lot of confusion and misunderstandings and, frankly, quite aggressive arguments from people that claim to understand and people that claim not to. So I'd love to get a bit more data on this, maybe even from like Shopify themselves. They've got a big enough population to do a pretty decent study on how people are using it and actually see what gets mentioned in performance reviews and stuff. Kind of like the way Google did their Project Oxygen and went back and looked at their own population to understand the impacts of their decisions. I would like one of these companies that does this kind of thing, this optionality, to then go back to that same population and conduct a scientific study on it just to get something, because I don't feel like I've got a strong opinion on this one because I don't really have any conclusive data in one direction or the other.
So let me give you an example of when I've seen companies do this, and it benefits employees even when employees might not understand what the benefit is. So let's say you're a company and you're operating in an economy where revenue is difficult to predict or difficult to obtain for a year or two. I don't know. Imagine a country where that might be an issue. And you're like, I don't even know if we're going to have money. I don't know if we're going to make a profit. I don't know if we're going to be able to give people a cash incentive at the end of the year or raises at the end of the year. But I want to give them an incentive. If we have cash, sure, I want to give people cash. But if we don't have cash, I want to give them something. I'm going to create this program where the default is a company choice to give you equity, RSUs at the end of the year. And if we have cash, we can do a conversion to cash. If you want it, you can convert the RSUs to cash. So instead of cash to RSUs, it's, I know I can afford RSUs. They don't cost me anything this year as a company. And if we have money, I'll give you some. But if we don't have any money, we all just get to kick the can down the road and hopefully we have money next year.
Well, okay. In my experience working for and with small to medium-sized companies, your available cash as well as the stock that you have appropriated for your employee plans is pretty finite and limited. So that's, hey, use some cash to buy, if you want some RSU. I mean, I see how the concept could work, like you said, for executives, right? For finite defined groups where it makes sense, and that's what the expectation is, right? maybe even some key groups within the company that are targeted in customer, success or sales or in your tech group. But as a company as a whole, as maybe in these larger companies that are just flush with cash, Google or Amazon or somebody, yeah, possibly. But in most SMBs, this broad concept across a population that has exempts and non-exempts and all the various issues that you've talked about, I can't see it at least currently working on a broad-based basis like that pretty regularly. Cutting edge or for a percentage of companies, possibly, yeah. A lot of digging into the pros and cons. Culturally, what's the fit? Budget wise, what's the fit? What you can get, your executive team and your CEO to buy in on, because, it'd be a complete mind shift of everything to move to something like that broad-based.
Now you're muted, Catherine.
We'll just walk up.
Can you guys hear me okay?
We can.
Okay. I don't know. My mic's being weird today. So I've bumped into this a few times, and it's not a common thing that I've bumped into anyway, but what we problems we kept running into when we tried to execute on this more flexible compensation program, and especially there was a large hospital system I was working with, and they really wanted to allow it was in a small community, and almost everybody, there were a lot of people there who had both the husband and the wife working in the same organization. So there was a lot of interest in giving the other party some additional cash for the health care that they weren't really, because they were double dipping basically. And we had a lot of difficulty, and I wasn't involved directly because I'm not a benefits expert, but we had a lot of difficulty getting a benefits person to try and tap back into. They kept limiting what the options could be, and we couldn't completely opt some people out. There were a lot of hoops that had to be jumped through. So we did end up getting to allow some vacation flexibility, but we weren't really able to get as far as we wanted to go because the vendors we were working with kept throwing up roadblocks.
If I may, I just wanted to go back to, I think that's a really good point, by the way, Catherine, as well. I don't want to discount your point, but I was thinking about Melissa's point about difference in company stages as well. And as many of my clients are VC-backed, I think this debate only really applies to public companies with public stock as well, right? So in the VC-backed world, I think the idea of any of this is just way too messy. Like you've got top-down limitations on equity usage, you've got overhang rates to keep an eye on, you've got runway of funding that will only get you. The idea of optionality would just throw all of that planning into chaos, and it's already difficult enough to get the requisite number of shares and the right amount of cash to keep you going. So my caveat to the audience is just that I don't think that I just can't see it working in the private company. I can definitely see it being something that we see more of in the public world though.
Well, public large companies, again, because my in-house experiences with publicly traded tech companies and such, at the medium size, 250 to 500 million, and still struggle with all of that.
Yeah, it's
right.
Burn rate and stuff. Yeah, that's true. Yeah, larger stable companies that can sort of weather that unpredictability maybe.
Mm-hmm.
I can tell you, I do a lot of work with private companies, and I've seen these choice programs actually be incredibly effective at privately held companies. It's all about the modeling, the planning, and the communication. Mm-hmm. The reality is it requires a level of communication that most people in the compensation world don't like. You have to really spend time doing more than a rollout. You have to explain stuff quarterly, maybe more often than quarterly. You have to talk about why things are going up in value or not. You have to talk about why you put the program in place and what the intentions were for it. And again, I don't see it as often in pure VC-backed private companies, PE companies, I've seen it work well. And in bootstrapped or long-term family-run companies that are competing in the same space with VC companies, it can be a differentiator to say, look, the VC is limiting this, and they only have this model. Whether that model is right or wrong, I won't even bring up on this call. But our model is different. Here's how we do it and why we do it. And it can be incredibly effective. But again, it's also not putting people in a place where they have to choose something wildly dramatic. These choice programs, from a burn rate perspective on equity, for those of you that are familiar with burn rates, usually you're talking single-digit percentages. It's not a big equity commitment because the amount of cash that we're paying people on an annual basis in incentives is usually not a wildly huge percentage. You're not giving people the ability to make $20 million off their equity if you're allowing them to convert a $30,000 bonus at 150% to RSUs. That's not going to convert to $10 million very easily in any company. I don't care who you are. Maybe OpenAI 2 years ago. So that concept, though, and I think one of the things that's interesting is there isn't anything that isn't standard that is a good idea for most companies. So any of these unique ideas are good for some companies, some organizations. And there's a whole bunch of interesting ideas that we should be applying across some kinds of companies. But most of these ideas aren't applicable to 75% of companies. So you can't offer an exchange for RSUs in a company that has no equity or that will never have any way to create liquidity. You can't offer an ability to choose variable cash in an organization where pay is governed by unions or governed by regulation. You can't. So all of these different choice programs, all these different variations on the theme, the first thing you have to start with is, what are your intentions and what are your capabilities?
Mm-hmm.
And you might go, yeah, your intentions are X, but you don't have any capability to do this. You're going to pay people standard base pay with a overtime and a bonus and shut up. That's all you got.
Yeah, I think that's spot on, Dan. I think anytime you introduce flexibility, whether you're talking about pay plans or anything else, the company profile has to be able to handle the infrastructure investment and the governance, right? And this is why we're talking about public companies that have equity available and things like that. Whether you're talking about something like equity or really any new talent feature you want to introduce into the system, if you want to introduce flexibility, you have to have those three pieces in a company that can do all three well. So I think that's a great point.
I think going to the question that David posed on LinkedIn is, this just has to be kind of part of your goals, right? Whether it's strategic or operational. I think the one company that I worked with that was kind of offering choices, they had this strategic goal of trying to hire more younger individuals into the company. And essentially they had this aging population. And so they're very concerned, like we still need to take care of them, but we want to get this new blood into the system. So we need to offer some choice because these individuals that are closer to retirement, maybe they want financial planning, maybe they want more equity as opposed to the base. We're kind of this younger generation we're trying to grab. We want to dial up the cash because they don't necessarily need the equity right now. Maybe they need help with student loans. So we need to come up with some type of kind of choice program so that way we can deal with these two populations. And really first they went out and asked the employees, like really kind of what is it, what is it that you want from kind of our various different rewards programs? What would excite you? What would get you to bring your friends to the company?
Yeah, Sabir also touched on this in his comment around having that choice program and using the cash for benefits that employees may not be able to purchase independently, on their own, but through the company's ability to offer to the group program. They could use the dedicated cash to that. and go for it that way. That concept could be well more universal to for-profit, nonprofit, startup, small, medium to very large. I mean, the ability, breadth and options that you offer is probably more limited as you're in the SMBs probably. But if you're queuing off your population and getting input on what's valuable to your population, then you can structure those offerings around what your particular population needs at this point by way of choice.
What kind of a theme that I'm hearing here? I think there are more opportunities, and but because this may only make sense for certain companies with certain kinds of programs and so on. Maybe that's why we see so few of these programs out there, because it only makes sense for a certain population. And then within that population, we have to have people who have the appetite and interest in doing something different. That is very risky for many executives. It's very hard to sell executives on something that they're doing when all their peers are doing something different. So that could well be part of why. Maybe it's not that we're scared. Maybe it's just that the opportunity isn't as big as we would like for it to be. That maybe there's narrower choices.
I like to refer to this sometimes as the difference between best practices and common practices. People all the time, I've worked as a consultant for a long time. People go, well, what's the best practice here? I went, do you want to know what the best practice is? Or do you want to know what everybody else is doing? That's the common practice. Perfect example of this is equity compensation. I bring this up as somebody that designs equity compensation plans, who's written books about the topic, and is known as an expert in that space. And the reason I bring this up is when I ask people the purpose of equity compensation, one of the things they always list is they're really good because they're long-term, they're great at retention. They're a great retention tool. And I always say, show me the evidence that they're great at retention, because technology companies have a higher turnover rate than any industry other than fast food. So explain to me the evidence that proves that they retain people when the average tech company is super excited when somebody stays for 2 years.
Well, maybe it's the expected practice, not the common practice. Because that would be tech, right? I expect equity.
Well, and I around in the Seattle area anyway, what happens is the tech companies buy each other's talent. So they're really not losing anything. They're not leaving anything on the table because they buy each other's talent out. It doesn't happen as much in other industries. That willingness to buy talent out from their equity packages is less common in other industries. So I think there may be something unique going on with tech.
Why force people into like a 4-year vesting schedule? Why couldn't you give people an arbitrage that says, well, if you want a 2-year vesting schedule, this is what your equity looks like. If you want a 4-year vesting schedule, we'll actually give you more equity and leverage it more at the current low price, but the risk of losing it is higher.
And I think it goes back to some of the points we were making earlier about the infrastructure, investment, and governance, like all those, having that in place. The more flexibility you introduce into the system, the more complex it's going to get, the more you have to manage it, the more risk there is, right? So I think that's fair from the company's perspective. You just have to be prepared to offer that kind of flexibility. I don't think offering that necessarily in and of itself is a bad thing, but you just got to be ready for all the consequences that come downstream of that.
Yeah, and you have human nature, right? So you have employees that say, yeah, I took the 2-year vest, but I didn't think I wouldn't get something, in year 3 from you, right? Even though it's supposed to be kind of a covering us for 4 years. You'll always have that employee that'll come back and say, I don't think I was treated fair because I didn't know everything.
Yep, you will. But
Dan,
the other way too.
Dan, coming back to your point, you said the reaction is retention, right, to equity. Why do we have equity? Retention, right? And we know it doesn't work. So the second thing what people say is, well, it will align people's long-term behaviors with the long-term interests of the company. What would you say to that?
Correctly designed and correctly communicated, Yes, and correctly designed and communicated, it's a great retention tool. But most equity plans, as we use them, are neither correctly designed nor correctly communicated. They're just a thing you get. It's sort of like when you get a meal at a restaurant and they give you a side dish and you're like, I don't know what this is and I don't even I wanted the steak. I don't want the Brussels sprouts. You can just keep them. And well, no, they come with it. I don't care. I don't eat French fries. You don't need to give me the French fries with the burger. Well, it comes with it. I don't care. Just keep them. Give them to your dog. I don't need them. But we don't do any of that. And so we become the McDonald's of pay. Again, it's fine. We give everybody a Happy Meal, and some people are very happy with it. And that's a common practice. But I don't think anybody here, even the people that work at McDonald's, will tell you that McDonald's makes the best hamburgers. Just because we sell the most of them doesn't mean they're the best hamburger. But just because most technology companies use right now RSUs doesn't mean they're the best tool for technology companies. It's just, I had a CFO earlier this week. He was talking about at a prior job, they had done some work and they had brought McKinsey in and they were spending gazillion dollars a month on McKinsey. And he went to his CEO. He said, what the hell? He goes, at the point I was a controller. He goes, why are we paying these? He goes, no one's ever been fired for using McKinsey. That was the whole answer. No one's ever been fired for you. No one's ever been fired for just using a standard pay program. I tell people Fortune 500 companies, the comp philosophy is be invisible, which makes people angry. But the reality is, if you're a Fortune 500 company, if you don't know what else to do, just do what everybody else did. At least it's not your fault.
Yeah. The only time that's not acceptable is if things are really bad and they're bringing you in to turn it around, right? Then you can take risks.
Right.
Then you've been essentially given permission because initially you're being brought in to make sure the ship doesn't sink. If it's already sinking, then what else could you do? Right. I'm doing something. I'm trying something different. So I think innovation, some of the innovation you're talking about, Dan, the opportune time is when they're looking for another way out, right? Because we're doing what everyone else is doing and we're not doing it well enough or better than other people. So we need some innovation. We need something different to get us back on track. So I do think there's an opportunity for some of those flexibility pay plans, but I think you have to find the right context to do it. And I think one of the best contexts is when people are looking for new solutions.
And again, I love that because then you get startups. The thing I tell startups all the time is, why are you a startup? Why are you creating your product? Because you looked around and you said, either no one's doing this or however anybody else is doing this is bad. So you're going to innovate in industry, but let's pay people and treat people exactly like every other company. I'm like, wait, the whole point is you're innovative. The whole point is you're doing things different. And that's so people don't know like how Spotify, they don't understand how Spotify is paying people, or they don't know about the pay programs at OpenAI. OpenAI just looked around and went, we don't really care what anybody else is doing. Everything we do is different. We're going to just pay people differently too. I'm not going to talk about their program, but go look it up. Most of you are going to go, I've never heard of these things before because almost no one's ever used them before.
And I think
I think that goes to Melissa's point, which is right. If you have a finite, spend on cash and equity, you're a little bit more limited. And maybe, as like James was saying, if it's not in this turnaround, I remember a lot of people coming to us when I was at previous company, and they would say like, what does Google do? Like, we would just want to know what Google do. Before that, what does Genentech do? Before that, back in the day, it was Microsoft. So, when you have those kind of endless budgets, you can be extremely creative in what you provide to your employees.
And people always go to those like industry presentations. World at Work is coming up. And everyone's going to go listen to Fortune 25 companies talk about what they do. And I'm like, I had a friend that years ago worked at Accenture and she ran comp stuff there. And I said, so she was doing a presentation. I just went, just out of curiosity, what's your budget for admin? Not your budget for systems, not your budget for your staff, not your budget for communication, just your budget for admin. She goes, oh, it's like $1 million a year. And I just look around the room. I mean, how many people, just raise your hand if you also have $1 million spent on compensation administration. I went, yes, you're not going to do that. You don't have $1 million. You're not going to build a custom system. You're not going to. We have to all be realistic. If you're watching this right now and you have 87 employees, this might not be the day you decide to roll out a customizable pay program. And if you are a hospital, it might not be the day you roll out a customizable pay program. So going back to what James, everybody named James, had said earlier about you got to know where you are, who you are, and then is this even a tool you can use? There is no such thing as one size fits all in the world of compensation, but we like to think there is. It makes us feel more comfortable. But honestly, if you've ever tried on one size fits all clothing, it doesn't. Trust me, it doesn't.
Yeah, first of all, Dan, if you ever want me to take your fries, I will take them. But secondly, benchmarking is not a strategy. It's a data point. It's a tool. It's not a strategy. Unless you want to be like all your other competitors and you have the exact same customers, the exact same customer segments, the exact same talent. That's not a strategy. And that is something that I've had that conversation more times than I can count. Benchmarking is not a strategy. It's a data point to help you understand the environment so you can make decisions relative to your specific situation, your strategic goals, your objectives.
As my mom said when I was a kid, if everybody else jumped off a cliff. And I'm like, oh yeah, my mom wasn't always wrong. Turns out if everybody else jumps off a cliff, you shouldn't jump off a cliff. And if everybody else does something that there's no evidence it's working, probably you don't need to do that thing. Whatever it is, I don't care. So I'll shut up now.
Well, and I think too, there's bespoke compensation packages where employees can choose what's right for them. But then if we expand that a bit more globally, I think you have to understand what's important to different cultures is not always important to the same cultures.
Right.
The last company I worked for was an Australian-based company, and they had purchased a gaming company in Seattle. And the idea of giving equity to software engineers in Seattle was just that blew their mind. Why would we do that? We never do that for folks. And like, if you want to keep any of the engineers, like, you better start figuring out how to manage that equity pool. So we were able to kind of have that conversation. But I mean, I will say that not understanding what drives and motivates people and what is, an expectation of employees. I mean, that the gaming company is no longer producing new games. It was $1 billion investment by that company, and 5 years later, it's not worth nearly what it was. And for me, that was one of the big telling moments of, well, this is not a company I'm going to stick with, because there's a fundamental misunderstanding from the headquarters of what's actually going to motivate the people what makes people want to work here. Mm-hmm. And I do think that, there are those cultural differences and you can't apply that one size fits all approach. But I think, Sabir made a good point around, employees, once they have good experiences with equity or other programs, that's when they begin to accept. That's what becomes more common. Or for those that have negative experiences. Another company I worked with, they offered, I don't remember what it was, but let's say it was $500,000 of equity. When they finally IPO'd, I think it would have been worth about $4,000. So, I mean, there's so many different ways, and I think so many different misunderstandings around equity programs, but also those customizable programs that I do think that it creates challenges. And I'm curious, I mean, what other experiences have you guys had with companies that have offered those bespoke packages where it didn't go well, or what kinds of reporting or administration? Pay equity to me seems like that would be an absolute nightmare to manage when everyone's picking their individual bespoke packages. I'm curious if you guys have had experience with programs reporting on things like that, or any recommendations for how could a company begin to manage reporting and pay equity considerations. Catherine?
So I haven't done any that had equity involved, but I have with the healthcare differentials and other perks and paid leave, things like that. And yeah, absolutely the analysis part of it, crosswalking from, one to the other to see where people are really stacking up. It's more work, but you have to have more sophisticated tools if you're going to have a more sophisticated program.
I like having an outside vendor come in and do a conjoint analysis so you can get people to do trade-offs in an analysis and model different things and see what would provide an actual valuable exchange or choice that would drive better reception from employees. I think that to me is where I would invest money in versus trying to come up with your own multiple options to offer employees. This just smells like drama and a headache, and I just don't have time for it. I like simple. I like recognizing that the majority of us have basic needs that need to be met, but so many of these choices, I think they aren't implemented because it only does apply to a handful of select employees. So yeah, it's drama and a headache is what this is.
Yeah, I would test drive it on a small group, like your executives or the customer service team or what have you. Work out the kinks if you really had the desire to make it broader. One of the other thoughts around that is, let's say you go big bang and put it in. And then, some people are loving it and some people are not, and the headache's crazy and you didn't do enough due diligence. You fall into the entitlement trap. Usually in my experience, once a company puts something in place, it's almost it gets entrenched almost immediately. And it's hard to back it out or change it meaningfully without, major disruption. So I tend to be a little bit more on the conservative side before I go whole hog or against my clients to go big bang versus stepping into it. So that's also something to consider, doing small and then scaling as appropriate.
I think that's a great approach. I think, starting small and scaling it, doing the test runs with smaller groups makes sense. One of the challenges I've seen with these type of programs, like there was an organization that I was working with that they gave free massages. I don't know. They had somebody come in and everybody got a free massage if they wanted it, once a quarter or something like that. And yeah, and we were looking at where can we get some more, cash to these people, because when we did the study, the massage was not really that interesting. What we found out was the execs were so proud of having the massage. They liked bragging about it way more than what the employees, it wasn't important to the employees. The employees wanted the money. The owners wanted to be able to tell everybody that they gave their employees massages. So sometimes there's disconnects between what is wanted by the employees and what is what the executive team wants from an image standpoint.
And I want to trace a thread back from Catherine to Denise to O at this point, because Denise, you mentioned the conjoint analysis, and if anyone's not familiar with that, that's a way of actually asking, basically, all things being equal, what do you prefer? And normalizing the value. And I believe, if I remember correctly, when you mentioned earlier, you did that study with the same company, that decision to implement flexible pay packages was a direct result of a conjoint analysis that said we need to figure out a way to offer flexibility depending on the generation of our employee. Am I right in that? Is that the same company?
Yeah, you got it. Yep, exactly.
So you gotta ask employees sometimes. Like you gotta have a problem to solve. There's no problem to solve, and don't do it. If no one wants a massage, and don't give them a massage. So a conjoint analysis is not an expensive or complicated thing to do. It sounds more fancy than it really is, and you might find something you didn't even know existed.
Well, I find conjoint analysis are far more expensive and far more time consuming than most small companies have the time or expertise to deal with. I will give everybody, there's a really interesting way to find out what your employees want and like. And it's It's kind of innovative, but in the tools are interesting. It's called talking to people, conversing with them, asking them. Most of your employees are not going to like stab you or bite your face off. And it turns out if you talk to people, oftentimes they will just tell you things like, I don't care about the massage program. I've never used it. That seems really creepy. It's at work. Or we all use it all the time. Whatever it is, we often, well, we're too busy. We're too this. We're too that. A lot of times people get into the comp world because they would prefer to have a relationship with their Excel spreadsheets. But the reality is either you or find somebody at your company that likes to talk to people and talk to people. You might find out enough that you don't need a conjoint analysis, or you might find out enough to go, oh God, we really need to do a conjoint analysis. But it can take a few weeks to do interviews where it might take significantly longer to do a conjoint. I love conjoint analysis. I love doing them, but I'll be honest, you can get a lot of what you get out of a conjoint pretty quickly by just talking to people, because it turns out that's how we were evolved to communicate.
And building on Dan's point, right? It's just also observing, right? So I had a client that she needed to remove the bonus program from a certain function. And what she noticed from that employee population, right, a lot of them drove really big trucks. They had multiple cell phones. And so what she did is said, look, we're going to take this away, but what we're going to offer you is some additional kind of, allowances and gas cards. We're going to offer you some money so you can buy a new cell phone, also gym passes. So she was able to kind of take away this one program, but add in some other allowances that cost a lot less. And it was much more impactful to that employee population.
I love that. Yeah, there's a lot of companies that are around for a long time that have tons of pay programs and some fringe benefit programs where you're like, how many people use this? Just Bob? Just Bob. He's the only one that uses this. Maybe it's time to tell Bob he doesn't get to have this anymore.
Yeah, I had a very similar experience, with a client where everybody in their group were all hunters. And so they gave everybody 3 or 4 days off the first of the hunting season that all the employees went to. And they got so much traction from that one thing that they wouldn't have gotten from any other alternative that was being considered. Anyway, I think you're really spot on there.
I thought you were definitely going to go with they brought deer into the parking lot, but okay.
No, they brought French fries, Dan. I'm still a little mad at you about the French fry comment.
Yeah, most people are. My son is very happy about it because he gets my French fries.
Yeah, and it, as we've kind of progressed through the conversation around offering employees bespoke, I want to pick this much LTI in exchange for this much base pay or short-term incentives. I think what we keep hearing is that it really comes down to just finding out what works for your employees and making sure that people understand and appreciate the offerings that they have, whether it's, through gym memberships or, a couple of days off during the first of hunting season. But it's funny. It tends to go back to that conversation. I think Dan O'Reilly does a lot of this study. It's like, is money what motivates people, or is it the feeling of being valued, the true motivator? And I think that there's a lot of research around and a lot of discussion around what we've had today, that giving people the choice and letting people customize what they receive from the organization, whether it's equity or gym memberships or different benefits packages or time off, that I think is where you really start to see the improvements happening and getting better employee engagement. Because there's lots of different ways we can approach customizing a total rewards package if we think about benefits and different elements of pay. So this has been fantastic.
I'd like to see us spend more of our time less on bespoke comp packages and more of our time on making sure people feel like they are cared for, that they matter, that they've been seen and heard, and that they feel they're getting feedback that is specific enough so that they can modify their behavior or continue to do things that are leading to the right results for the organization they work for. I think we spend a lot of time on cash and equity and benefits and some of these things when what we really need is authentic connection and the ability to trust each other in the workplace. And we've got some work to do in that space.
Yeah, it's interesting. We didn't touch on this today, is the differences between the generational gaps, right? What boomers want out of there, because they're still in the workforce. They're not all gone yet, down through Gen X, Gen Z, where we are today, millennials. Broad base, they want equitable comp, fair comp, and feedback, but it looks differently per those the generational groups and how they want it delivered. Like Denise, do they want to have face-to-face? Are they good with the electronic, online frequent feedback? So that's also something to consider that we didn't have a chance to dive into today. That's a whole nother conversation probably.
And I will just throw out one caution. Years ago, I had asked somebody in a presentation, I said, so what did the compensation department say about this? I was doing a moderated presentation. And the person said, oh, we don't ask them. They're the Department of No. I went, what does that mean? Oh, it doesn't matter what we say. The first thing out of their mouth is no.
Isn't that finance? I think finance gets the award for that. Usually.
I'm telling you, that's what people see from a lot of people in the comp world. So maybe instead of starting with no, say, oh, that's interesting. Let's look into it. I'll do some research. But even on the beginning of this call, most of us started with no, this is nobody does it. We don't. And then as you talk through it, oh, well, yeah, I guess I have companies that do that. I guess there's people that do that. I guess I've worked with somebody. I worked at a company. So don't start with no. Start with maybe. You could still end up at no. But be inclusive of other people's ideas. We're not doing things that right. Because if we were, people would like pay more than they do.
Coming up at the top of the did you have something to add?
Yeah, I was just saying, right, instead of as you were saying, Dan, not starting with no, but I think starting with listen to your employees, listen to kind of observe what they want, and yes, open up with a more open mind, as far as kind of what can we creatively do, and maybe we still get to know. But it's, again, going back to our last panel, which is, communicate and over communicate.
Should people communicate more?
Yes.
Yeah. Slow down. Yes. Listen to each other. We don't slow down. We're going fast and a million miles an hour and we're distracted. And slow down and listen to each other. Authentic connection can go a long way to attracting and retaining talent. And we don't spend enough time curating experiences so that it feels good and people know that what they deliver each day matters.
However, David Nygaard makes a very good point in his comment just then that pops up, I thought. Mm-hmm. Just to offset that perspective.
Yeah, I think if you don't do that, then your competitors might, to be honest. Yeah. Like if you're not willing to listen to your employees or at least engage with them, whether you're talking about a conjoint or you're talking about focus groups or you're simply just having more frequent one-on-ones with them, your competitors might be willing to do that.
Again, it's the old comment of this business would be great if I just didn't have our clients. They make my life so hard. And you're like, yeah, kind of, but also, and it'd be easy if you just didn't have to worry about your employees. But as it turns out, kind of important.
For the record, I'm going to assume David was joking with that one, but
I've met David.
Well, we are just about at the top of the hour. Again, a great conversation. And one of the things that I'm constantly reminded of is how important it is to keep the human in the human resources part. It seems like we always come back to open communication, being inquisitive, and really trying to understand what motivates people. So again, it's a great reminder of, as we're trying to figure out what is it that drives people. Is it a bespoke compensation package, or is it, massages at the office? It's going to be different for everybody. But again, thanks everybody. Thanks Denise, James, Dan, Melissa, James, and Catherine for joining us for this Pay Practitioners panel. And we will look forward to another episode 2 weeks from now on May 16th. And if is everybody at World at Work next week or in a couple of weeks?
I'll be there for a day, I think.
No,
not this year.
no.
Well, we've got one more show before that, so maybe that'll change. But if not, we will talk then, and we'll see you there or from another practitioners panel. So